4 stocks I'm thinking of buying this week. Welcome back, investment fam. Like most of you, I put money to work every single week trying to find what companies to invest in. For each stock, we're going to take a quick look at recent news, why I'm looking to invest in them. So let's get started. The first company we are going to take a look at is Activision. This is in the gaming market, and you might know them from some of their biggest franchises like Call of Duty, Crash Bandicoot, Spyro. You might also know them from Blizzard like Diablo, World or Warcraft, or you might even know them from your mom or your grandma playing Candy Crush. So I did talk about the gaming market in my weekly market update, which I did yesterday, and I kind of talk about all these sectors that I believe are a bit undervalued right now compared to the rest of the market. The gaming sector was one of them. So here's a pretty cool chart that I want to share about the gaming investment world, right? We can see this is revenue for 2021 so far, and it is down about 1.1% compared to the same time last year. So you might be like, Jose, why are we investing in a market that is down compared to the same time last year? Remember, last year we had COVID, we had a lot of lockdowns, so a lot of people were still, were just at home playing games. Even though the overall market is down, the mobile market is up 4.4% compared to the same time last year. And I want to say that is pretty impressive, especially since we saw Activision, right? They have Candy Crush for the mobile world. In their Call of Duty platform, they also have Call of Duty Mobile, which is doing amazing. So those are markets within the mobile games. They also have other Blizzard games that are doing so well right now. So this is why I'm really taking a look at Activision. This is currently traded under the NASDAQ as ticker ATVI. From its 52-week high, the stock is down about 11.13%, and it currently has a market cap of $71.69 billion and a price of $92.26. And here we can take a look at their most recent earnings, which they represented May 4th of 2021. Activision segment revenue grew 72% compared to the same time last year. One of the major reasons was the in-game revenues of their Call of Duty Mobile. The King department also saw revenue growth of 22% compared to the same time, reaching a new record. Next, let's take a quick look at their fundamentals. But before we go there, guys, when I started this video, I feel like it's been over 2 years since I've been making videos. I think it's actually been longer than that. And I've never had a name for the community. And I started thinking, and I came up with investment family. I think that's probably the best way to describe what I'm trying to do, right? So let me know if you guys are enjoying that new name. I want to have a name for the community. And if so, let me know in the comments below if you are happy to be part of this investment family. And let me know who you are. Are you the stepbrother? Are you the cousin? Are you the uncle? Are you the aunt? Are you the cousin twice removed? I want to have fun with this. I really want to interact with the community. I talk with a lot of you guys. And also make sure to hit the subscribe button, the thumbs up. It helps so much with the overall channel. And let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So if we take a look at future growth, Activision is expected to grow 8.4% on average for the next 3 to 5 years. So it's not a heavy growth stock, but it's not a slacker either. One of my favorite things about Activision is this is a super positive cash flow from operating machines, a cash flow company. That is what you want during times like this. This is also profitable in earnings. If we take a look at their financial health, they also have a strong balance sheet of about $9.5 billion in cash and $3.3 billion in debt. Not only that, if maybe you might be looking for a dividend stock, this doesn't have strong dividends right now, 0.5%, but we can see as this company continues to grow as this positive cash flow from operations, I do believe eventually this will be a nice dividend stock that will be talked about in the future. So the second stock we're going to take a look at is Pinduoduo. This is an e-commerce mobile application. I am taking a look at the emerging market as well, just because of yesterday's episode on my latest market update. I am going to post the link here so you guys can also go check that out after this video. And the emerging market seems to be very interesting right now. I believe it's a bit undervalued compared to the rest of the market right now. So Pinduoduo is pretty interesting. This is a mobile application in the e-commerce market, and they really promote what they call social buying. Social buying is when you kind of have when you kind of make it fun for you to buy stuff, and you kind of show your friends and your family so they can also join in this fun. They are, I want to say, a very heavily machine learning company to some extent, right? Let's say I downloaded Pinduoduo. I can't really search for what I want to buy. Pinduoduo will pretty much show me what I need, and it's gonna do that based on my historical purchases, on my historical likes, on my historical cards and stuff like that. So the more I shop, the more information they get and the better products they're able to offer. So this is currently traded under the Nasdaq as ticker PDD. It's currently sitting at $127.60. It is pretty big, market cap of $159.92 billion. From the past 52-week high, the stock is down about 37% right now. Their most recent earnings, they showed revenue grew 239% compared to the same time last year. The number of annual active buyers for the 12 months ended March increased to 823 million users, making this application the most widely used e-commerce platform in China. If we take a quick look at fundamentals, this company is expected to grow 25.4% on average for the next 3 to 5 years. Unfortunately, the company is not GAAP profitable at the moment, but they are positive in cash flow from operations, and me, I'm more of a cash flow type of guy. If we take a look at their balance sheet right now, financially, they have plenty of cash, about 83.4 billion Chinese yuans, compared to $12.1 billion in that currency. So very, very strong balance sheet. The third company we are going to take a look at is Tattooed Chef. This is the one in the plant-based product. If you go to some of your grocery stores, you might see their products out there because they are expanding into new stores right now. One thing I wanted to see is how the plant-based diet topic was going on in Google search for the past 5 years. And we can see overall, the trend is still going up, which is pretty impressive. There are some times when it peaks up pretty high, and people are just very, very excited about this overall diet trend. But we can see plant-based is definitely uptrending here in the United States. Now let's take a look at it worldwide. Worldwide is actually looking the same. So Tattooed Chef right now is traded under the Nasdaq as ticker TTCF. Now we can see from its 52-week high, the stock has definitely seen quite a pullback, 28.57%. Obviously, there have been better days to purchase Tattooed Chef, but unfortunately, I'm here dollar cost averaging. I can't really put money to work every single day. So some days I might buy high, some days I might buy low. So Tattooed Chef is definitely a small market cap company of $1.6 billion. Some recent news about Tattooed Chef: on May 18th, they announced new products in Whole Foods Market stores nationwide. They also completed their acquisition of New Mexico Food. These were multiple companies that they purchased and kind of expands Tattooed Chef into the southern Mexican style food, and also it kind of pushes them outside of frozen food and into other markets. If we take a look at their most recent revenue, they grew 59% compared to the same time last year. Now let's take a quick look at fundamentals. This one's expected to grow 33.6% on average for the next 3 to 5 years. Overall, I really do like the company's balance sheet. They have $185 million in cash. Remember, this is a small market cap company and only $2.1 million in debt. I do want to say after the acquisition, it might change a little, but I don't think there's going to be much impact on the balance sheet. The final company we are going to take a look at is Mercadolibre. This is another e-commerce in the emerging market. They hit all these countries in Latin America right now, from Argentina, Bolivia, Brazil, Chile, Colombia, Costa Rica, Ecuador, Guatemala, and so much more. The 3 main markets that they hit right now are Argentina, Brazil, and Mexico. Here is a quick look of some of the products that they do. They do a lot of fintech like Mercado Pago. This is like digital payments, digital wallets. They have Mercado Crédito, more like business credit loans. They also have Mercado Envíos. This is pretty much logistics and shipping. Mercado Libre, their overall e-commerce platform. Mercado Shops, which is pretty much a way to open up an online e-commerce store using their solutions. So that's just a quick overview of those products. Within those products, it can get a little more in depth. Right now, this is traded under the Nasdaq as ticker MELI, M-E-L-I. Right now, the stock is sitting at $1,541, market cap of $76.86 billion. If we take a look from its 52-week high, the stock has seen better days, is down about 22.31%. So here I want to take a look at the top apps downloaded in multiple Latin America countries on June 25th of 2021. We can see here on market, Google Play, country Brazil, Mercadolibre is number 5. In Argentina, it is number 1. In Ecuador, it's number 4. In Chile, it's number 2. In Colombia, it's number 3. In Mexico, it's number 4. In Peru, it's number 5. And if you guys were taking a look at the rest of those top 5s, there were 2 or 3 players that seem very interesting that I'm gonna have to do a video on later on after doing this quick research. So Mercadolibre right now, if we take a look at their most recent earnings, it grew 158% compared to the same time last year. If taking a look at neutral basis currency, their total payment volume grew 129% and their gross merchandise volume grew 114%. Triple digit growth all over the map. Unique active users grew 61.6%. Successful items sold grew 110%. So we can see they are seeing growth in all their markets. If we take a look at fundamentals, Mercadolibre is expected to grow 25.8% on average for the next 3 to 5 years. They're not profitable in GAAP earnings, but they are positive in cash flow from operations, which is what I really care about. If we take a look at their balance sheet, they have about $1.2 billion in cash and short-term investments and about $2.2 billion in debt. I do want to say their balance sheet could be a bit stronger, but right now it seems like they are seeing competitions in Latin America from some other big players. So right now I'm pretty sure they're just trying to double down, triple down on growth right now, and that's why that debt has increased. But remember, they have strong amount of cash right now, and they also are positive in cash flow from operations. So now let's take a quick look at the overall technicals. I just want to make sure these stocks are not overextended. Activision, not overextended at all. If we take a look at PDD, not overextended either. Tattooed Chef, not overextended. Mercadolibre might be a bit overextended right now from a short-term and moving average. Again, that doesn't deter me from buying. It just deters me from buying a big position. Regardless, I do believe a good portion of the risk has been eliminated. Of course, the stocks can continue to go down. The final thing I want to take a look at is valuation metrics. And here I want to take a look at forward price to sales ratio. So let's start off with Activision right now sitting at 7.2. And we can see these are levels that it kind of been stuck in for the past 8 to 10 months right now. I wouldn't say it's overvalued. It's just been pretty quiet in the market. If we take a look at Tattooed Chef, price to sales ratio of 5.0, compared to the data we have right now, it is cheaper than some of its peaks. I want to say it's on average of where it normally is. There has definitely been some better times to buy Tattooed Chef, but remember, they just acquired some companies and the revenue growth can continue to grow, so this price to sales ratio can decline. Next, we have Pinduoduo. This is currently sitting at 6.609. It is, I want to say, a lot cheaper than where it's been in 2021. But it is still pretty expensive compared to 2020. If we take a look at Mercadolibre, I want to say it's pretty much the same thing as PDD. Right now sitting at 8.9. It's cheaper than where it's been in 2021, but it's still a bit expensive compared to where it was in 2020. Regardless, I do believe a good portion has been eliminated for all 4 stocks. So that's it for today's episode. At the end, I usually purchase every Thursday, and if you guys want to know what I purchase, make sure to join my Discord channel. It's free to anybody that wants to join. Out of these 4 stocks, I'll probably purchase somewhere between 1 to 3. Very rare for me to find 4, but I'd like to give myself options just because some of these stocks might jump up a little bit before I purchase. So I might have other options to purchase some of these other cheaper ones. So take care, guys. Have a good night and see you next time.